A structural shift is underway in the global silver market, and China sits at its epicenter. While headlines focus on gold's relentless march to new highs, a more dramatic story is unfolding in silver, one that could push prices toward the once unthinkable $100 per ounce threshold within the next 12 to 18 months. As of January 10, 2026, silver is trading near $30.50 per ounce, up approximately 18% from its position just 3 months ago. While this rally has caught the attention of precious metals investors, the real story lies beneath the surface in supply-demand fundamentals that are becoming increasingly stretched. China's role in this equation cannot be overstated. The world's largest manufacturer of solar panels, electronics, and electric vehicles has seen its industrial silver demand surge by an estimated 22% year-over-year through 2025, according to the latest data from the Silver Institute. This acceleration shows no signs of slowing as Beijing doubles down on its renewable energy commitments and technological self-sufficiency goals. Unlike gold, silver's value proposition extends far beyond monetary and investment uses. Approximately 56% of global silver demand now comes from industrial applications, with solar photovoltaics alone accounting for roughly 20% of total consumption. China manufactures over 80% of the world's solar panels, creating an insatiable appetite for the white metal. The numbers from China's manufacturing sector paint a vivid picture. Solar panel production capacity in China reached 650 gigawatts in 2025, up from 450 GWh in 2024. Each gigawatt of solar capacity requires approximately 130,000 ounces of silver, translating to an additional 26 million ounces of demand from this sector alone, nearly 10% of total annual mine supply. But solar is just one piece of the puzzle. China's electric vehicle production hit 12.5 million units in 2025, with each EV requiring roughly 1 to 1.5 ounces of silver for various electrical components. The country's push into advanced semiconductor manufacturing, 5G infrastructure, and artificial intelligence data centers has created multiple new sources of silver demand that barely existed 5 years ago. While demand accelerates, supply faces structural constraints. Global silver mine production has remained essentially flat at around 850 million ounces annually for the past 3 years. Primary silver mines account for only about 25% of production, with the remainder coming as a byproduct of copper, lead, and zinc mining. This means silver supply is relatively inelastic and slow to respond to price signals. China's domestic mine production of approximately 120 million ounces per year falls woefully short of its consumption, which now exceeds 280 million ounces annually. This 160 million ounce deficit must be filled through imports, recycling, and drawdowns of above-ground stocks. Perhaps the most intriguing and least transparent aspect of China's silver market is the question of strategic reserves. Chinese state-owned enterprises and government-affiliated entities have been consistently net buyers of silver in the physical market, though exact volumes remain opaque. Trade data shows China imported approximately 5,100 metric tons of silver in 2025, up 34% from the previous year. Market analysts point to the unusually tight supply in London's vault system, where silver inventories have declined by approximately 15% over the past 18 months despite relatively modest price appreciation. Much of this metal appears to have flowed east, never to return to Western markets. This pattern mirrors China's gold accumulation strategy from the previous decade, when the nation quietly became the world's largest gold holder, while official reserve figures barely budged. The Chinese understand that silver is both an industrial necessity and a monetary asset, explains Dr. Robert Chen, a commodity strategist at Shanghai University. In a world of de-dollarization and technological competition, securing silver supplies is a matter of economic security. Retail and institutional investors are beginning to take notice. Silver ETF holdings globally have increased by approximately 8% since October 2025, with particularly strong inflows in Asian markets. The gold-to-silver ratio, which measures how many ounces of silver equal 1 ounce of gold, currently sits at roughly 90:1, well above its historical average of 65.1 and far from the lows of 30.1 seen during previous silver bull markets. This ratio suggests silver remains significantly undervalued relative to gold, even after its recent rally. If the ratio were to revert to its long-term average with gold at current levels around $2,150 per ounce, silver would trade near $44. A move to the 50.1 ratio seen during heightened industrial demand periods would imply 50-cent silver, and a return to the ratio lows of major precious metals bull markets would put silver well above $90 per ounce. The case for $100 silver rests on several converging factors. First, the supply deficit continues to widen. The Silver Institute projects the global market will face a structural deficit of approximately 180 million ounces in 2026, the fourth consecutive year of significant undersupply. Unlike gold, where central bank reserves and accumulated jewelry can provide liquidity, silver's industrial consumption is largely irreversible. Once used in solar panels or electronics, silver is rarely recovered. Second, China's demand trajectory shows no signs of reversing. The country has pledged to reach 1,200 GWh of solar and wind capacity by 2030, implying a near doubling from current levels. This alone could add another 25–30 million ounces of annual silver demand. When combined with continued EV growth, 5G expansion, and emerging technologies like quantum computing and advanced medical devices, Chinese demand could approach 350 million ounces annually by 2028. Third, investment demand remains in its early stages. Silver's total above-ground investable stocks are valued at roughly $45 billion at current prices, a rounding error compared to the $14 trillion gold market or the $50 trillion global equity markets. Even a modest allocation shift towards silver by institutional investors could create price pressures that dwarf the current rally. Fourth, inflation and monetary concerns haven't disappeared. With central banks globally having expanded their balance sheets dramatically since 2020 and government debt levels at peacetime records, concerns about fiat currency stability continue to simmer. Silver, like gold, offers an alternative store of value with the added benefit of industrial utility. Of course, the path to $100 silver is not guaranteed. A global economic recession could temporarily dampen industrial demand, though China's policy-driven consumption might prove more resilient than market-driven Western demand. Significant above-ground stockpiles exist, particularly in India, which could provide supply cushion if prices rise sufficiently. Technological substitution remains a possibility, though silver's unique properties, highest electrical and thermal conductivity of all metals, make it difficult to replace in many applications. There's also the question of mining supply response. At $50–60 silver, many previously uneconomic deposits become viable, potentially alleviating supply constraints within 3 to 5 years. However, the long lead times for mine development and increasingly stringent environmental regulations may limit how quickly supply can respond. Whether silver reaches $100 per ounce or not, the fundamental transformation underway in the market is undeniable. China's industrial demand, combined with supply constraints and growing investment interest, has created a setup that bears watching closely. The white metal, long overshadowed by its golden cousin, may finally be having its moment. For investors, the current price near $32.50 may represent either an early entry point in a multi-year bull market or a temporary spike before reversion to longer-term ranges. What seems increasingly clear, however, is that China's quiet accumulation and consumption of silver is reshaping global dynamics in ways that could reverberate for years to come. As one Hong Kong-based precious metals dealer put it, "We've spent a decade watching China transform the gold market. Now they're doing the same thing with silver, only faster and with more conviction." The West is only beginning to notice. The coming months will reveal whether $100 silver transitions from theoretical possibility to market reality. But one thing is certain: ignoring China's silver squeeze would be a costly mistake for anyone trying to understand the future of commodity markets.